Welcome to the Real Journeys of Success with Rob Elliott. Yes, your coach. And this is quite funny. We've got someone back by popular demand. He is a New Yorker who lives in London, England quite a bit. He's now back in the States with his family doing business. He's our overseas correspondent. Someone said that they actually loved him so much. You could call him a philanthropist. He's a real estate expert. He does real estate and hospitality investing all over the world. And I'll be honest with you guys, he's a pretty nice guy too. Welcome to the show, Peter Plout. How are you, buddy?
Rob, it's great seeing you, mate. Always love having a chat. Always get to see your smiling face, and love our text messages when we can't be seeing each other as well.
Mate, since we last spoke, the world we all thought was hopefully coming to an end on this COVID journey, and it seems to be someone extended the roller coaster because it's been up and down, left and right. The economies in Australia, the UK and America are all performing vastly different. You've got your hand on the pulse when it comes to where money's going, where the high-end money's going, what people are doing. And a lot of the things that the people who are uber successful are actually being replicated down the line where people are doing something similar. Now you've sat back, do you see the economies coming out of it in the world as it was before? Or do you think there's going to be a seismic change in how people invest and where they put their money compared to the pre-COVID days?
Rob, that's a great question. There's a lot of questions embedded in there. So let's just start. I think there's different parts of the world that are still under significant lockdown, and unfortunately, heart goes out to them. Still, the COVID deaths still continue to spiral upward. That's not just in India, as we're seeing now, but that's different places around the world. Listen, I live in the UK. I've been living there for 20 years. I was lucky enough to escape to the US. Probably should have done it a little sooner, but that's where I work. That's where I live. That's where my family is. But luckily, a couple of weeks ago, I was able to fly out to Naples, Florida, with my family for the next few months, and that's where we'll stay. I have a lot of business opportunities that I've not been able to see or take part in over the last year and a half, except on Zoom chats. But you look at the UK, still under lockdown, despite a significant part of the adult population having the vaccine, and that's upwards of 50%. But the economy is still locked down, and Boris is probably not going to open up it fully until the data shows that the COVID virus is under control and the majority of the population have the vaccine, and the variants to that vaccine aren't showing their self. So I think the UK will be an economy that is going to be lag the rest of Europe in terms of coming back. The US is firing on many cylinders. Obviously, there's various stages of lockdown, but here in Florida, it almost doesn't exist. It's almost like a constitutional right, whether you want to wear a mask or not. I think people that want to care about others will be wearing masks and stuff, but I go out, I look, the economy is doing fantastic in terms of the real estate markets, particularly on the high end, people leaving the larger cities, going to the suburbs. You call up you have to take my word for it, call up a local real estate agent and try to find a house. It's very difficult. Real estate is going up despite what I would have called a depression. Same time we were speaking last year. Parts of Australia have gone back to lockdown. You know that better than me. Others are doing quite well. Other states are doing quite well. Portugal, which was under lockdown, is all of a sudden opened up again. So, I think what you're going to see is this massive pent-up demand for people to go on holiday, whether that's staycations or whether that was actually to travel. Now, various countries, as a U.S. citizen, you can't go to the UK, you can't go to Europe, and vice versa. But eventually that will, once the vaccines are more widely dispersed, they'll come out. So I think the tourism sector is bound for a very strong revival over the next 6 months, possibly starting this summer as things pick up. So I think you'll see hotels becoming in more demand. But this is in tourist locations, okay? The tourist traveler, this is not business. Going on a business conference with 1,000 people, that's not picking up anytime soon. And the hotels that are based on those big conferences, we might have to wait to 2022 to see some type of pickup there. So Economies obviously starting from a low base versus you last year. 2021 will be a lot stronger, particularly in the second half of the year, based on all the monetary, based on all the fiscal stimulus. And where I'm spending most of my time investing, Rob, is in threefold. One is residential real estate. Two is hospitality at the very high end. And in some cases, the lower end, the extended stay type of model. We could talk about that shortly. And then also looking at AI, quantum technology, cybersecurity. We just had a huge attack on one of the pipelines here that shut down the coast recently. So cybersecurity is going to be something that's very interesting in terms of investment opportunities. And AI is going to be much more powerful of in the future. If your car has more data on you than your home or a hospital or a hotel, there's a problem fundamentally there. So we're going to see a lot more technology, green tech, clean tech, ESG compliant type of stuff in the future. And if you can participate in some of that from an investment point of view, I think you'll be well rewarded from a longer term perspective.
So you see, I would say listening to that, and I've heard something very similar in Australia, they've said the companies that fail now to adapt and pivot to what the new world will look like are going to fall over fairly quick. And the ones that have just adapting to what you just said, AI, new technology, new way of doing business, they're the ones that are going to flourish. When you're talking about people like, I think Grant Cardone said the other day that, real estate's going to be a great investment long-term because there will be pent up demand. He said, you just got to do your due diligence and what we say in Australia, or do your research and what's going on. When you look at, we'll go back and have a look at that thing about staycations and long stay, where my wife and I quite often go to Thailand. We go in and out of there quite a lot and we love the place. Now, our favorite hotel in Khao Lak, which is you get onto it out of Phuket, which is the southern island, but you go back up onto the main island. It was the place that got wiped out by the tsunami years ago, the worst. They've rebuilt. They're moving from, at the moment, because no one can get in and out, because in Thailand, they're starting to bring them in from overseas shortly. The hotel is offering 1 month stays for people to come and do business with free Wi-Fi and breakfast. So, because as you just said, people want to get out. They want to go away, but they want to go on holiday, but they're still got to do their work. And so they're filling their hotel with people who want to do business, but want to sit on a beach in Thailand and do it. You never would have thought that would ever happen. And that's just one big hotel. I can imagine what you said. You're in hospitality. You look at that, you're going, well, the hotels that were looking after business, so they're in trouble, but the ones on vacation, they're the ones that are going to boom. Do you see that is going to happen overseas as much as it's happening in Southeast Asia?
Well, first of all, we need to wait till the vaccine is rolled out more in earnest and more of the world's population has access to it and have taken all the required shots. But let's say we get to a point where a good portion of the world's population has had that by sometime this summer, either midsummer or late summer. Okay, as I mentioned, that pent-up demand will take place. If a lot of the countries are still locked down, then staycations are going to be what's going to happen. People are just going to drive more to different locations because they won't be able to take planes. But where I'm focused and where I'm investing is, remember, for my family office, which is a multi-billion-dollar multi-family office, we're providing debt facilities and equity facilities anywhere from 150 million to several billion. So I'm looking, for instance, in the Caribbean, for instance, not too far where I'm sitting right now. We're looking at Four Seasons, Mandarin Oriental, Waldorf Astoria, Six Senses. We're looking at the high-end operators where people, they're not giving away free vacations, okay? They're going to be still, their ADRs are going to be $1,000 a night or close to it for the people that could afford to be in those places. But one thing that's going to be clear, people, tax rates are going to have to go up to spend for the massive amount of fiscal expenditures that have been taken on by governments in terms of these packages that have been put out, many of which I'm not in agreement with. You can't give somebody $1,000 or $2,000 or something like that and think it's going to help them. They'll buy themselves a new iPad or a new iPhone. Okay, so it doesn't. initial pop to retail sales, but it doesn't help the fundamental problem. The fundamental problem has to be resolved by lower taxation across the board, proper spending programs. But then we're getting into a political conversation I don't want to get into. What I'd like to basically go back to is that there's going to be a huge demand for properties, whether that's in tax haven areas or areas with lower taxation.
Yeah.
Cayman Islands, Puerto Rico, St. Kitts, Anguilla, Portugal, the free zones in the UAE, etc., where people will be able to invest something, whether it's $500,000 or more, either to residential real estate or a company, and get a passport. Okay. Yeah. And then they have to decide whether they want to keep their actual domestic passport based on where taxation is. But if taxation keeps going like it is in certain states in the US and overall what the Biden administration is talking about federally, I mean, you get up to tax rates over 60% at the margin between federal, local, and state, which is what we've seen basically back in the 70s and 80s. You'll start to see a lot of the wealth go out to places that'll have lower taxation areas. That's why we're seeing a good influx into Florida, Puerto Rico, and other areas. So I think at the high end, going back to hospitality, we'll continue to do well and extremely well going forward. I'm seeing, not anecdotally, I'm investing in hotels across the globe, whether we're talking about in Asia, whether we're talking about in Latin America, whether we're talking about in the Caribbean, when we're talking about in France, Courchevel, Megève, we're talking about in Sydney, Melbourne, Brisbane, the UAE, Dubai, etc., high-end hotels. We're spending the money on equity and debt because that's where people want to be. And I think you'll see ADRs starting to shoot up quite aggressively over, call it the next 6 to 12 months in those areas. And we're putting our money where our mouth is. Some people say that's a contrarian view, Rob. I don't think it's contrarian at all. I just look, I sit back and I try to digest what's happening in the world and where the investment opportunities need to be. And that's going to be in certain areas in residential we'll talk about, in the hospitality I just mentioned. The business hospitality is going to be dead for quite some time.
Do you think some of these high-end hotels may have to increase what they offer rather than just a swanky suite, better Wi-Fi, mini offices or floors that have got much big business centers for people who are high-end who are in these hotels? The demand's there, but they've still got to keep
Rob, that's even a given. That's already starting, okay? At the high end, okay, and then we'll talk about the low end. At the high end, okay, if you're talking about warm climates, beautiful beaches and stuff, you're going to have to see service like you've never seen before, more like the service that you're accustomed to in the Middle East or in Asia, because people are going to demand that if they're spending, upwards of $1,000 a night in terms of where, the ADRs are coming out. They're going to demand that type of service. And so you're going to see the demand for a higher level of service. And also the wealth in the world is increasing in various stages. And as the wealth, that smaller percentage gets larger portion of the pie, they're going to demand, higher end offerings. So that's clear. But if we take it down to the modest level, investment level, in order to check into a hotel, you're not going to see a really handsome guy or beautiful woman checking you in anymore. You'll be able to do that from your iPhone. You'll be able to order services like you do at home on your iPhone to your room. You probably won't be touching a lot of things because you won't have to. It'll be on your iPhone or iPad or smartphone, okay? Last night I went out with my wife while we were talking before the show to some steak restaurant, and they had on the table, just point your phone at a little block on the table, it was a little grid, and you pay for your check and give the tip to the waiter or waitress right there and then. There's no interaction in terms of physical bills.
That's all come through already in Sydney.
So that's happening. But then we're going to get into green tech and clean tech. And that is not just going to be in hotels and offices, but it's going to be offices as well. If you're sitting in a residential building with 100 apartments, 200 apartments, or for that matter, a hotel, you want to make sure that you're not sharing the same air as the guy next door in the post-pandemic world. Okay, so you're going to want to, the developers, as they're developing these hotels, are going to want to have HVAC systems where they're basically the air throughout each individual room and the individual building is recirculated every 15 minutes to 30 minutes. So green tech, clean tech, all that is going to be much, much more important. And the technology companies that are focused there are benefiting. On top of that, public companies that have to release to shareholders quarterly reports are going to want bragging rights about the offices that they just leased. And those offices better be damn compliant in terms of environmental, socially responsible, corporate governance, focus, green tech, clean tech, carbon neutral, all that sexy stuff, because they're going to want bragging rights in their annual reports and quarterly reports. And if the office companies and developers are not providing that, okay, then those buildings are going to have to trade a significant discount to the ones that do offer those services. So
we're just starting to see
it's across real estate.
We're just starting to see that now in Australia, especially in government buildings where they're actually got to rate the carbon embodiment of the building. So they're looking for low carbon embodied products, and the businesses, when they go out to tender, they have to meet a certain standard, be an ISCA or Green Star, and the government's now starting to bring that in ever so slowly in the major government buildings, and we know that it's going to flow down to your house. We know that it's going to go down, but it's also going up. What you were talking about, I can back it up. We had an article in one of our local, the main paper in Sydney, where it said high-end restaurants are doing a booming business thanks to COVID. Because the people that were going overseas and were spending big dollars overseas are now spending it here. And so that your top silver service, your hatted restaurants, all of those, they're now spending the money. So all your top end are full. They're expecting good service and they're paying for it. But it's the one end of the restaurant market that's absolutely going gangbusters. And
so I'm not seeing that yet. I'm seeing, going out to the high-end restaurants and the medium-end restaurants, they're still not at, capacity. They've been significantly hurt by this pandemic. They're trying to find useful ways. I think they benefit in terms of additional income through, online delivery services and stuff. They're still struggling. And if anything, Rob, going to humanity type of things, I'm seeing more and more people going to restaurants. These waiters and waitresses haven't gotten tips. They live on tips, particularly during this.
We don't have that
minimum wage, right? So you get a bill that they're expecting 20%. They've been out of work for almost a year now, or trying to find other jobs to supplement that income. So, if you're seeing in a restaurant, see the waitress, the waiter, the bartender, give them $20 or something if the bill's $100, 20% or something, and thank them for their service. I think if anything, there's been more empathy, and I'm seeing it every day. As I mentioned to you yesterday, my wife was buying some hamburgers or something at a local shopping center here in Florida, and some lady ran right over to her and said, "Let me pay for your meal." My wife's like, "What are you talking about? There's something strange thing in the burger? I mean, kids say, what's going on?" It just says, Jesus loves you. Just want to take care of you. So people are paying it forward, and I'm seeing that more and more each day. And I'm also seeing it in companies in terms of hiring decisions, in terms of diversity and inclusiveness in decisions. So if anything is brought about by this pandemic, I think is a focus more on diversity and inclusion and empathy. I hope that stays, and it's not just a fad. I hope it's more something, but it can't stay. It can't be government dictated. It can't be by politicians talking about it. It has to start in the individual home when kids are young and with their families, talking about diversity, inclusiveness, empathy. It's got to start when you're young. And if it's not part of the family values and ethos, then it's not going to permeate. Governments can't tell you what to do. A corporate can't tell you what to do or how to act. It's just got to be something that's ingrained. And, hopefully this pandemic teaches people to be more empathetic going forward.
I think that's something that business needs to take up, especially a lot of businesses from the old school businesses don't have a lot of empathy for their customers. They're not inclusive. They don't respect diversity. They trade as they always are, pick the people they've always had, and very, very few times do they open up to what their customers actually thinking. If we go back, you were talking about real estate, you were talking about AI, and you were talking about green tech. If you're an investor now, if I'm looking at the world economy and that's where you trade, When it comes to return on investment, which of those three will give you the quickest return, and which do you think is going to give you the best?
Well, that's a good question. So let me break that up into a couple of things. So as an executive director of a multi-billion-dollar family office, okay, we're looking at protecting the wealth, the multi-generational wealth, okay?
Yeah.
So you can call us bond investors, in the fact, not investing in bonds. It's basically saying you invest as a bond investor, you're looking for your principal back plus an adequate coupon for the risk you're taking, right? So we're looking to be long-term investors in terms of looking at long-term investment decisions, and decisions that means that we'll get an appropriate risk-adjusted return for the risk we're taking, but looking at it over a longer stretch of time. Now, so let me break that up so it doesn't look like I'm hedging or anything. So we're looking at investments. Our core business is investing in real estate, okay? Yep. Longer term, not shorter term, looking for it, buy the house and it's gonna pop up tomorrow. No. So long-term investments with tremendous amounts of due diligence, sometimes greater than 6 months going into that, where we're focused on the management team, we're focused on corporate governance. We're looking at the risk return for the particular developer that we're providing our equity capital to and our debt capital. We're looking at their ability to execute through economic cycles and have a track record of doing so that we get confident in their ability to predict the future in the investments that they're taking on. So a tremendous amount of due diligence is needed for a proper large real estate investment. As I say, our size is somewhere between 150 and several billion. That's number one. Number two, we also look at oil and gas and natural resources, alternative energy, but with all that, we have to look at the engineering studies, proven and probable reserves, offtake agreements, if it's alternative energy, and who those offtake agreements are with. So again, a much more longer-term investment decision. I would say the same thing. The biggest sexy thing now is everybody's talking about is SPACs, special purpose acquisition vehicles, and so what the hell is that? Okay, they've been around forever. Okay, but all of a sudden now, got a couple guys started talking about them more as an easy way to take a private company public and list it on the NASDAQ or the New York Stock Exchange, Australian Exchange, although the US market seems to have the most depth and breadth in terms of that market. That market's been around for a long time, and investors can invest in the SPAC, okay? And they know exactly what they're investing in, because we're at the beginning, it's just cash. Their money's put into treasury bonds, government bonds. And if they don't find an attractive vehicle to, attractive company to invest in, that money's returned to them. Although in many cases, it's never returned to them. They do find a company. But all a SPAC is basically a shell company that's looking for in the future other companies to invest in. And there's SPACs, going directly to your question, focused on AI, crypto, Bitcoin, cybersecurity, real estate, anything under the sun. The most important thing is the same thing as investing in a company. Management. You could have the best company in the world, Amazon, Google, Apple. Corporate governance sucks, the company's going bankrupt. So management. The management of a SPAC needs to be able to have experience and the ability to execute on purchasing a company that's private, taking that company public, but then making the company deliver better than it would than if it remained as a private company. So again, it goes back to management being able to execute. So again, to take a long-term view in the management. There's no free lunches. Okay, so when you ask me what's the short-term opportunity, well, for me, as more of an institutional investor, not an individual investor, Rob, the biggest investments to be made, the biggest money to be made in the short term was between last March and last June, because the central banks and governments around the world learned from the 2008 global financial crisis. Instead of taking 2 years for them to turn on the spigot of monetary easing, they did it in 30 days, 6 weeks at the most. So all this capital flooded into the global financial markets and capital markets in general. Okay, when there was an initial dislocation in prices, otherwise fundamentally good companies in the equity market were trading 20% lower. Okay, Other things were going lower. Bitcoin went lower, etc. All this liquidity was flushed in the system. So if you had the capital, the big hedge funds, the big family offices could take advantage of that easy liquidity and buy stuff for pennies on the dollar. And that all happened, and all that then ended. Instead of taking 2 years during the global financial crisis, it was compressed into about 3 months.
Yeah.
So the easy money was done and made by institutional investors. And that doesn't mean, oh, these wealthy guys sitting in their offices on Wall Street and London and stuff made all the money. That's not the case, because the pension funds that manage the money for teachers and policemen and firemen are some of the largest institutional investors, right? And they're also invest in private equity funds and credit funds, etc. So they were also beneficiaries of that. Mom and pop that had the foresight to stay in the market, because the market in equity is supposed to be a longer term investment, but most people look at the herd and sell right away, were rewarded by phenomenal upside in all the major market indexes over the last year, which goes contrary to what most people would have thought. But the fundamentals were still sound for many companies. It was just an exogenous event caused by the pandemic that caused that dislocation in markets. So where do I think the investment should be? Where should you be investing? I'm not saying go out and buy the stocks of a hospitality company or hotel company. They've got to prove themselves over the next several years.
Yeah.
I think you look at, as anything, you look at the top 10 companies that make up the big indexes, you do your proper financial analysis on them. But definitely the pandemic has created opportunities in AI, in cybersecurity, quantum, green tech, clean tech, companies that are ESG compliant, socially responsible, good corporate governance, environmentally friendly. Institutional investors will have to invest by mandate in those type of companies. And there's plenty of indexes that have been created already about companies that are ESG compliant, and there's risk ratings and stuff around that. So I know I'm not mentioning specific companies. I'm giving you themes, basically.
Yeah.
Those themes being that real estate from a long-term perspective will continue to do well, but it's a long-term perspective, and you've got to do your homework. Number two, obviously don't use a lot of leverage in any investment decisions, because the volatility can kill you.
Yes.
Number three, in AI, in cybersecurity, look for the leaders in those particular places and invest confidently there. But like anything else, I tell this to my kids that just graduated school, okay? If you're gonna spend $4 a day on a cup of Starbucks and then you buy another cup, that's $8 a day. Okay, let's round that up to 10 because I'm not good at math. That's $50 a week if you're doing it during a 5-day work week. Okay, that's thousands of dollars a year. Over 5 years with compounded interest, investing properly, you can turn that into $10,000, $20,000 or more. So you got to really think more about what is your discretionary money that you can allocate to higher risky things that are more stable based on assets like real estate, and then some of the other players. So I think that's more important. Be disciplined. There's no free lunch in the world.
Mate, that's some awesome advice for people who are looking, because I know a lot of people who listen to the podcast are investors, and they're very prudent these days on where they put their money and what they're doing. 2 last questions for you. First, you talk a lot about management and a lot about how important it is when it comes to a business. If a CEO or a CFO comes to you who's running a major corporation and says, where or what should I focus on personally in the next couple of years as we come out of COVID to ensure my business or the business I run is sustainable and can make a lot of money? What do they got to look at compared to where it was before COVID?
I'm going to preface that, first of all, from whether we're talking about institutional or retail money. When the world started falling apart, I quickly called up my parents and said, go all to cash. The whole world's going into a depression. And my phone will probably ring soon for my father bitching and moaning about that I told him to do that. But again, he's 80 years old, or close to it. So he shouldn't be investing in the stock market, and certainly not Bitcoin. So, I stand by that. If he was in the bond market or in high dividend stocks, not really growth stocks or something, he would have still done very well. It might not have done as well as some others, but so I'd stand by that. From an, if somebody comes up to me and says CFA or CPA and asks me, where should my clients put their money? I'm not a wealth manager. I have no expertise in retail. So I would basically, focus on what I do know about and where my expertise lies in certain specific asset classes. In real estate, I could tell you what those asset classes are. Okay. In the real estate asset class that'll continue to do well is those companies that have long track records and good liquidity. And I'm talking about operators now, not necessarily developers, operators that can go through a pandemic and economic cycle and have the liquidity to maintain there. Okay. So, and then within those actual asset classes, I think data centers and logistics will continue to do well. They've obviously got a large amount of followings over the last couple of years as we've seen the growth and need for more and more data and quicker computers. Well, that'll continue to take place. So I think data centers will do well, but you can't just invest in a data center. I got a warehouse next door. I'm going to create that into a data center. There are plenty of publicly traded REITs focused on data centers that have the management expertise and the technology know-how to work with the Amazons, the Googles, the Facebooks, the others, and know exactly what their requirements are. I think in real estate and asset class, I think the higher end hospitality operators will continue to do well, as I already mentioned. Okay. I think there's going to be a more and more need for real estate that is at moderately priced real estate, workforce housing, where there's it's too expensive for somebody to live in a particularly higher end neighborhood, but that's where all the work happens to be. So lower end community, lower type of expensive housing. If you go back to the 60s, the 50s, Sears Roebuck and a couple others, they had these planned communities that they started where they built houses so that people can live and work and send their kids to school in areas that were otherwise people wouldn't live in. So conversions of those areas, I think, will do extremely well. I think student housing will do extremely well. It was all pulled back during the pandemic.
Yes, true.
I think that'll come back in large size. I think in terms of alternative sources of energy, and that doesn't necessarily mean go out and buy all the Tesla stock you can, because batteries still require a lot of fossil fuels to make, etc. I'm simply telling you there's going to be a need for alternative energy that's not just battery operated, that's not fossil fuel. It could be, we talked about this before the talk started on gas and the need for natural gas fired things. More importantly, I think that'll be a solar, but again, don't just invest in a solar company. You got to make sure they have very strong offtake agreements, etc. That will do well. And then I think, cybersecurity, find the leaders in the cybersecurity space, because that Colonial Pipeline that was just hit, that caused massive gas lines across the East Coast, is going to continue to happen again and again and again. And local governments and federal governments are not prepared for the attacks that are likely to continue to occur. So find the leaders in cybersecurity, because the government's going to have to hire them to protect their infrastructure and their critical infrastructure. I mean, and I'm not just talking about pipelines. There's all kinds of stuff that's critical infrastructure that could be attacked. So that's going to be important. As I mentioned, AI, artificial intelligence, quantum is going to be much more important, and it's going to be permeating everything we do going forward, whether that's our offices, our homes, the hotels that we stay in.
Yeah. Look, everything you've said makes complete sense. And I was reading up the Financial Review and a few of the other papers online before we caught up today, and a lot of them are saying very much what you're saying, and it's great to hear. My only main concern out of all of that is, without being political, are governments around the world equipped with knowledge and the ability to make the decisions to support what the big corporations, the investment houses, and that need to get the world economy back going again and create the jobs.
No, I think the problem is politicians are politicians, okay? And the problem is, I don't care whether you're in the US or you're in my home in the UK or you're anywhere in Europe or you're in Australia for that matter, I don't care. The problem is we've now gone onto a political spectrum where we are either far left or we're far right.
Correct.
There's no centrist policy. And if people can't meet in the middle and politicians are just focused on their reelection, and it's usually every couple of year cycle, nothing will get done. Nothing will get done. It has to start at the individual level. So I don't think governments have the ability, they demonstrated across history, to be good spenders of the taxpayers' money. If they were, we would have brand new streets all across the US. But you go drive through New York with all the potholes and stuff. No politician's been able to say, we're going to take this money for raise taxes, and the tax money is going to go there, here, and here. And it's going to hospitals, it's going to schools, it's going to education. I don't know where it goes, okay? But it's not clear for the man on the ground that that money is going to service the services that the population elected those officials for. Because at the end of the day, they're too focused on themselves. So until we get more of a centrist political spectrum across the globe, those decisions are going to be very hard to be implemented. And the problem is, you'd say, then leave it to the capitalist model, the corporate model, because they know how to allocate capital properly, particularly a public company, because if they're not allocating capital properly, the shareholders will see that, the bondholders will see that and invest in another company. The problem is the governments need to give the tax incentives to those companies to be provide the capital, provide the research and development to do what they need to do. But if you have a regime that's going to change capital gains tax to ordinary income taxes, and it causes companies to have unnecessary burdens on taxes and other taxes that aren't even a tax, they're indirect, that's going to postpone or completely defer CapEx investment, and that'll have an add-on or knock-on effect on the overall economy. So economies won't be able to reach their potential. And you might say, oh, I'm wrong. A year from now, we'll have the same call. Economies are all doing well. People are going 3, 4, 5, 6% above potential. I would say that's a one-off. That's a one-off because we're starting from a low base case because of the pandemic. Okay, everything just bounced. Yes. The problem we have now is we have governments that are extremely indebted with no chance of getting back to balanced budgets where they could actually start to reduce.
Not even close.
Interest payments are going to be taking up more and more larger part of budgets, which means there's not going to be money for the education, health, welfare, infrastructure without more spending and more borrowing, etc. So that doesn't lead to a healthy, long-term and sustainable economic bounce. So again, what we need from politicians is very simple. We need politicians to basically work with their corporates, encourage, I'm not talking about just the large corporates, I'm talking encourage the small and mid-sized businesses to hire, because that's where majority of the innovation is taking place. It's a small, mid-sized business. Those are the businesses you want to encourage to hire more people, be innovative, and make sure their taxes and they're getting the proper grants, et cetera, to continue that innovation. And I think right now the problem in the U.S. is that type of innovation stuff can be stymied by and by both ends of the political spectrum because it's so divided.
I think it's been replicated around the world. Before we finish up, we're going to finish up on a bit of a lighter note. I'm going to throw a question to you that you don't know is coming. In the last 12 months, you and I are both family people. We cherish everything that goes on in our house and all that. What would be the fondest thing you can remember that's happened over the last 12 months on a home, outside of work, that put a smile on your face when you look back over the ups and downs of COVID that we've all been through?
I don't have one particular one, but I'm going to tell you one thing that was great, and I think everybody appreciated that, is that everybody's working from home. They're working on Zoom chats and Teams chats and etc. Is that, and I'm looking at the door right now, is my 3 little girls all dressed in Disney outfits, waiting to break in and give me a hug and get online here and wave to you, Rob. I think, companies has expected people to see their kids and stuff like that on these videos. So I've been blessed where I've been able to spend more time with my 3 girls. I have 6 kids. I have 3 boys. The other 3 are grown up and out of the house. So I don't see them as much anymore, but that has been very touching to me to watch them. Now they're only 3 years old and 4. The twins are 3. So half their life they've been in lockdown, which is a shame. Half their life they've been in lockdown, but I've been able to enjoy watching them grow up, which I wouldn't be able. Well, they haven't grown up yet, but at least watch little things I wouldn't. That's been touching to me. The second thing is, and I think it is more important, is I think we've too much taken for granted our daily lives in terms of busy, and working just to work. That, it's nice to see that when my phone rings, it's my mom, it's my dad calling me to see how I'm doing, how they're doing, etc., and actually taking the time out for personal things. It's not all about work, and I think people realize it's not all about work. Here, and companies are also. Listen, I'm working here in Naples, Florida now for the next couple of months because my employer is basically saying, you can do whatever you're doing, do it right. Just do it from home, do it from another location. What's the difference? So I think that opportunity has been a blessing for me as well. But the other thing I mentioned is I am seeing, and what gives me a little smile is the little tiny things of kindness that I'm seeing from people wherever I go. And whatever I see, like I said, somebody bought my wife lunch the other day. People giving a little more tips to the waiters and waitresses. People being just generally kinder, stopping in the street and saying hello. I'm seeing a lot more of that than ever existed before, as everybody was rushing with their daily lives. I think people have taken a step back. And I'm not talking about people that have the money to do so. This is not a financial at all. And you're saying, oh, well, I'm so stressed and this, what about all those people that lost their jobs and unemployment? I feel for them. Don't get me wrong. I'm not talking about that at all. I'm simply talking about any average person, just a bit more humanity. I'm seeing more and more every day in the littlest of things.
Oh, mate, I couldn't agree more. It's I'm seeing it in Australia, especially. I'm speaking to people overseas, like I do with you, and they are all saying the same thing, that the world has reset. It needed to reset, and the majority of people are being much kinder.
Well, I met you on this call. I can't wait to see you in the Let's Up and give you a big hug. And just to that, I do a weekly show called LA Token VC TV.
Yes.
I usually present the family office perspective. I'm not an expert in AI or venture capital at all, but I present the family office perspective. I met some wonderful friends. And just last weekend, because I'm here in the States, one of the people I met on the show happened to be in Miami. He drove always up and stayed for the weekend with my family. And the first thing we did was give a big hug. He took a picture, a selfie, and put it on Instagram and Facebook. I think he's going to write something on Medium where the virtual actually turned into reality, where we actually became friends like brothers through a chat just like this. We speak every day on WhatsApp and texting, and we finally got to meet each other in person. Now, I was a bit, I think I was a lot shorter than he thought I was, because I can always go like this and pretend I'm bigger. But that was just a wonderful experience to actually meet somebody that was virtual, to actually give them a hug. And by the way, my parents I haven't seen in a year and a half. That's like virtual going into reality when I get to see them in a few months as well. So
my only concern is all the people I've been interviewing turn up in Australia the same weekend, and we'll be down the Mercantile on the Rocks, and it'll send me broke because they all want to come here and have a beer. Pete,
or staying with you. Or staying with you.
Hey?
Or staying with you. Wanting to stay with you.
Yeah, well, I've only got 5 bedrooms. I think I need 50, to be honest, buddy. Mate, it's been an absolute hoot, as I say. I love talking to you. I know we're going to have to rebook in around Christmas again to see how the world's going and see where you are, which part of the world you're living in then. Mate, from my family to yours, stay safe, enjoy Florida. I look forward to catching up with you again soon. And as you and I know, we keep in contact. And I know the listeners are going to absolutely love what you've been saying today after they did last time and asked me, when are you going to get him back on? because I
Well,
love his
just
honesty.
give them my look. Reach out to me on LinkedIn,
Yep.
on WhatsApp. Share my email, my contact details. Always happy to meet a new friend. If anything, we spoke at the beginning. I'm all about meeting new friends, new family, sending the love. My only caveat is it permeates my life. Just no assholes. I just want to meet good people. Invite them to my house. Stay here. I don't have a big enough house to invite the whole world, but my home is your home. Come, stay, meet the family, talk business, talk personal, whatever. Love for everybody to reach out. So sending lots of love to you and your family, Rob, and all your listeners, and hopefully we can all make it with each other, make each other a little more happier each day.
Mate, how true. And I'm going to sign off like I always sign off on the show to everyone. Have a groovy day.